All right, guys, welcome back to the Independent Investor Channel. This is really kind of becoming a tradition on the channel. Having run the channel now the last 3 years, I'm going to be coming out with my 20 stocks for 2020. This is going to be super, super important. I'm constantly monitoring the landscape, seeing what new opportunities may exist out there, obviously with valuations being where they are, and the opportunities being as lean as they are, in my opinion. There is still value in this market. But before we get started, I want to say a couple things. Obviously, I am not a financial planner. You're going to have to do all your own research on these stocks, as I do mine. But I roll these out for entertainment and awareness. Okay, I think a lot of the importance of getting started in the stock market and even evolving as a stock market investor is to understand what's available out there. So your awareness is really going to go a long way as to what good companies are always being mulled over and looked for and picked over for value. And typically I'm looking at the same stocks year in and year out. I think if you went back through my catalog of videos, you're going to find that a lot of these same names come up. But I think you're going to be very, very interested to know where I see value going into 2020. And ironically, where I don't find value. I'm going to be coming on with a follow-on video with the 20 stocks that I believe you probably should not invest in 2020. So stay tuned for that. But let's kind of roll right into it, guys. This is for entertainment. I usually have a ton of fun with these stock picks. Usually the old landscape used to come out with stock picks 3. This is going to be 20 rapid fire. These are all really valuation calls at this point. Most of these names I do personally own. And a lot of the stocks really that I feel like you probably shouldn't initiate new positions in 2020, I also own those as well. So I'm going to kind of separate the landscape a little bit. We're going to talk about the stocks that I think are looking very, very well. First is Cisco. All right, ticker symbol SCSO. This is an excellent technology company. It's large cap, great dividend payer, very good company. It's probably one of the best as far as value as I comb over the landscape. And the other names, the top tier names in the technology sector, the sector's up 45% this year. Cisco really has flown under the radar, and I think Cisco is ripe for the picking. I own over 100 shares in Cisco right here. I'm going to continue to own and enjoy owning it into 2020. It's worth taking a look at, Cisco. The next on the list is Disney. Ticker symbol DIS. It's come off of its initial excitement on the Disney Plus streaming service that they've rolled out. Disney does a whole lot more than just streaming service. They've got their entertainment parks, they have their cruise ships, they have their multimedia with their the movies, blockbuster hits. Last year they came out with 5 that were multi-billion-dollar producers. So a lot of exciting stuff going on with Disney. This is one of the top 5 stocks that I believe that you can buy and just own forever. And I do walk the walk and talk the talk. And Disney is and will continue to be a cornerstone in my portfolio. Another cornerstone, a top stock that you can own forever. This is my favorite on this entire list of 20. And J&J looks like it's probably the best buy for 2020. If you were looking for one single name in the healthcare, I'm going to name 2, and they are 2 of my absolute favorites. I hold big positions in each one of these healthcare names, but Johnson & Johnson speaks for itself. A wonderful dividend payer. It's paid the dividend over 100 years. It's done nothing but reward shareholders over time for owning this fine company. And for the folks that deliberate over single stock entry in the market and they don't think that they've got the proper risk tolerance to enter into single stock, perhaps considering owning a name like Johnson & Johnson can ease some of those premonition about the risk involved in single stock. I've enjoyed owning Johnson & Johnson for the last few years, and we'll continue to own it going forward. The next in the healthcare sector is Pfizer. PFE pays a dividend of close to 4%. Pfizer is a dominant player in the healthcare industry. It's extremely undervalued right now. I'm not really sure how it's been combed over in the market, but I think going into 2020, Pfizer's one of the top picks. Ticker symbol PFE. Definitely could be one of those stocks that you put into the portfolio to consume some of that healthcare sector exposure for yourself and set yourself up and start to lower that cost basis in some of these great dividend paying names. That's the name of the game. Enter into these stocks, and as you own them over time, they become cheaper and they start to reward you more. It's wonderful. The next one is part of the energy sector, and the energy sector has been an extreme laggard. It was the only underperforming sector this year in the United States stock market, but this quality company, ExxonMobil, pays close to a 5% dividend. The ticker symbol is XOM. It's one that I've held for a very, very long time, so my pain is your gain. I would look to pick it up here in the 70s. I think right here, sub 70, I think it's a value. Very well-run company. I think it's suffered from the downturn in oil. I think it's definitely got some headwinds, and I actually think it still has those headwinds. But I think energy is going to be the surprise sector in 2020. Mark my word, I will probably be wrong, but then again, there's a chance to be right by throwing out these hypotheses. If you think that technology is going to outperform by 45% again, I think you're probably crazy. I think if you needed to get some energy exposure in the portfolio, I've got three names on the energy sector, ExxonMobil being the only producer in the group, XOM. The next is in the telecom communications sector. It is one of my favorite, best run companies as far as I'm concerned. I've owned it for years, and it is Verizon. Verizon is close to a 4% dividend yielder. Huge company. Ticker symbol VZ. If you're looking to step into the potential for some 5G exposure, Verizon will get it done for you. I think they are the best service provider in the industry, bar none. They are not the largest, AT&T is, but I think Verizon, as far as their products that they serve and the coverage that they offer to clients, is second to none, and it is unbeatable. Verizon. The next is an oil service provider, and this is a name that I took a pretty big loss on this year in the smaller portfolio, so it was a relative loss, but it was large in comparison to the portfolio that it was held in, and that was Halliburton. The ticker symbol is HAL. Halliburton is a service provider. It's one of the three major companies in the world, Baker Hughes and Schlumberger, and Halliburton is the other one. The next one is DuPont, ticker symbol DD. And that's in the materials sector. So I was really trying to get you some exposure across the board and get you that opportunity in the materials sector as well. So super important there. The next is Boeing. Boeing has just taken it on the chin. It just recently replaced the CEO, which I think was a positive move for the company. Boeing will come out of this fine, okay? It may take some time, but you're not going to be given this type of opportunity in Boeing very often, okay? Ticker symbol BA. It does pay a small dividend, but the premier player in the aerospace sector, in industrials, so no better way to fill up some exposure in the industrial sector in the portfolio than working with BA. The next I've already mentioned is Schlumberger, ticker symbol SLB. Schlumberger is the #1 oil service provider. It is a 4% dividend yielder, if I'm not mistaken. So really get you some nice dividend exposure at a very recessed valuation. Schlumberger has really taken it on the chin with energy throughout the course of this year. I've traded Schlumberger and owned it as an investment multiple times in my history. I currently do not own Schlumberger. It's one of the few on this list that I don't own. But the #1 oil service provider in the world, SLB. So a unique way of playing energy that really has been drawn down with the rest of the energy sector, okay? The next is Walgreens Boots Alliance. ticker symbol WBA. It is really with the class in the brother and sister category with CVS. CVS will be one that I mention in the follow-on video, but Walgreens Boots Alliance is a buy here. 19,000 stores, and they're across the world. So a great opportunity from a valuation perspective to step into WBA. FedEx has gone through a couple of very, very poor quarters. I think they've got some real problems in the company. UPS would have been the stock to buy in the shipping sector. But FedEx, from a valuation perspective, has really been beat down and probably oversold at this point, and probably has a few bits of appreciation to gather there. FedEx is one of those great Dow components. If you wanted to grab a hold of it right here in the 160s or so, I think you're ripe to do so. Next is in the discretionary sector. This may surprise you guys a little bit, but Lowe's, L-O-W. And of course, one of the two major home improvement category names, L-O-W, is one that I've just recently entered into based on valuation. It was a screaming buy, well-run company, very, very good exposure, and looking to make some very, very good money with that going into 2020. The next is McDonald's, again in the discretionary sector. This is one of three actually very interesting pickups that I made this year, one of four actually, with Starbucks and TJ Maxx. But McDonald's is just wonderful. Probably one of the best buys that we're looking at here on the list, ticker symbol MCD. 3% dividend yielder, a company that's been around for a long time and will continue to be there. It could really fit into a nice starting portfolio, couple shares. You don't have to get crazy on any of these positions, but McDonald's is definitely one of my top 20 picks for 2020. Walmart, okay, so we're pulling out some of these old dinosaurs. Walmart has really started to catch fire here. That looks like they can perform on par with Amazon on the online space. Walmart is really one of my favorite stocks. It's an easy stock to own. It's one of those ones you really don't have to worry about. It's almost recession proof. It's a great company. From top to bottom. You gain a little bit of dividend yield with Walmart as well. A little bit more expensive on the valuation, but justified at that as far as I'm concerned. Next, I may take some abuse for this because as far as technology in the list, I had to dig into the old tech. Okay, with Cisco, and then this name with IBM. I think IBM is a buy right here. IBM pays a fat dividend. From a valuation perspective, it's undervalued, trading at about 12 times forward earnings. IBM is one of those that I may look to actually add some shares here as it starts to build a nice base here. It's found really, really rock solid support at 125, and I don't even think it should be that low. I mean, this stock really is just waving at investors, telling them to go ahead and pick it up. If nothing else, just pick it up for the yield and just sit on it forever. It's the same idea with ExxonMobil. But I think IBM is just a tried and true winner over time, and one of those blue chips that really can fit into a lot of portfolios for a lot of people. But IBM is right there on that list in 2020. Next is an interesting one. It's a value play in the auto space. It's not one of my favorite spaces, but contrary to YouTube, the YouTube community on where you should go with the auto space, General Motors is actually a buy right here, a high dividend yielder and just a pure play value play. Has really gone through a lot of restructuring with the company. And for all you dividend investors out there that are looking for exposure in the auto industry, General Motors really topped the list. Now the next one is an interesting pick. I've got two left. This next one, I couldn't figure out how to buy it. So if anybody knows if Detroit Diesel is actually owned by Daimler Chrysler, my next pick, I believe, is traded on the European stock market. And I was actually going to try to call and see if I couldn't pick up an order of Daimler Chrysler, okay? The ticker symbol is DDAIF, and it's been one of my favorite companies for a long time. And I've never owned the company. but this would be tops on my buy list. I almost bought some shares today. If I could have figured out, I probably would have had to call if I indeed have access. So if there's some European investors that are tuning into my message, I don't think there's any better value play here than Daimler Chrysler, paying a 6.5% dividend. Need to figure out a little bit more information on whether or not I'm eligible to even invest in Daimler Chrysler, and I need to understand whether or not Detroit Diesel, DDC, is actually wholly owned by Daimler, which I believe they do. If you guys have more information about that, please leave it in the comments section, because I'm really chomping at the bit. These guys do a phenomenal job. I've actually toured the factory outside of Detroit, and I actually contend that they're the best diesel engines in the world, right up there with Cummins, John Deere, Volvo Penta. They're right up there at the top. So Daimler Chrysler, DDAIF, for all you pure play dividend players. Now the next one is probably the lowest valuation. It's probably still, even at its current price, a touch overvalued. But I think for anybody that's looking at getting into a cornerstone in the industrials sector, I think you should look no further than 3M. The prospects of owning 3M right here, I really do think it's coming off of a price low of $150 in 2019, and I really do think it's going to approach $200 in 2020. I really think it's gone through a very poor phase. I believe it's a wonderful diversified business. For all you dividend seekers out there that are looking for a nice dividend payer to chunk away in the portfolio and let it make you money over time, what a great way to round out this list of 20 with 3M. I'm a proud owner in 3M, and we're going to continue to work that stock going into 2020. Guys, I hope you appreciated the list of stocks that maybe are looking like a buy in 2020. Really appreciate your time. And you know, do your own research on these stocks. If you've got some buy ideas going into 2020, I absolutely encourage you to leave them in the comments section below. Don't hesitate to hit the subscribe button to the channel if you like the message that we're putting through. Guys, thank you so much for tuning in to this top 20 picks for 2020. Good luck in your investment future.